Hello and welcome to Livewise Fund in Focus. My name is Chris Conway. Today I'm joined by Andrew Parsons, the Chief Investment Officer for Resolution Capital. Today we're going to take a look at the Resolution Capital Global Property Securities Fund, managed fund, trading under the ticker RCAP on the ASX. Andrew, thanks for joining us.
Thanks, Chris.
RCAP is the only actively managed global REITs ETF available on the ASX. What is your philosophy, Andrew, and how does it differ from the passive opportunities?
Okay, so what RCAP is really all about is giving a broad range of investors the opportunity to gain exposure to some of the world's best real estate, right? Some of the world's best underlying real estate in a listed form. And so what we're trying to do is identify real estate that is going to generate superior long-term performance because it is real estate where there's limited amount of supply, where we're seeing good, robust tenant demand, and as a consequence, we expect to see rental growth at least in line with inflation and hopefully managed by teams that are able to extract more value, create value that can be then realised for our investors.
Andrew, you brought along a chart for us based on looking at sentiment and valuations and how it's changed over time. What are you seeing in that space?
Yeah, there's no doubt our sector has been going through a bit of shall we say, a rough patch, or at least seems to be lacking a little bit of enthusiasm, shall we say. And we've seen that periodically, in my career over since the 1980s really, whereby investor attention goes towards perhaps hot sectors, and they fail to recognise that real estate is a durable investment that through time will deliver, we think, competitive long-term returns, but with a very good income component, and the fact that it's a desirable asset class in itself. So for us, this current lack of interest is a great opportunity for investors who are off chasing the high flyers at the moment and overlooking what we think to be some really good value. Because what we're seeing with current implied values is that they're trading below replacement cost. And so we're not going to see a huge amount of supply come to the market. And as a consequence, low supply and relatively high occupancy levels means that landlords are coming into a period of basically having pricing power. And that means that they're going to be able to push rents for a sustained period of time without the threat of a huge amount of competition coming into the market. And the other thing with the REITs is that, in fact, they've got great balance sheets, probably some of the best balance sheets we've seen, as I say, in 30 plus years. Financial leverage is relatively low. And the REITs actually have very good access to capital because of the quality of the real estate and because they are actually in very good financial shape. So for us, this is a space that we think, is well positioned today, given the pricing is below replacement cost in many cases, that there's limited downside, and because of their financial strength, they're actually in a position, we think, to surprise to the upside.
Andrew, let's talk about what's in the portfolio. Retail, residential, data centres and healthcare REITs make up a big portion. Why is bricks and mortar still of interest given the challenges that sector faces?
Yeah, retail's probably a great example of, at the end of the day, it is all about location. And retail property, what people forget, yes, of course, e-commerce and Amazon has obviously had quite a meaningful impact. But the reality is that still 75-80% of retail sales takes place in bricks and mortar. It's a very important way for businesses to sell goods and services to the consumer. And as a consequence, what also is being recognised is that e-commerce delivery to the home free of charge doesn't make money. Well, the reality is the most profitable sales a retailer can make is still through bricks and mortar. And with services where you can't, find an alternative way of delivery, it is still the go-to destination. Now, curiously, despite COVID and the growth of Amazon, what we've seen, in fact, is that retail sales and shopper visitations back to shopping centres has returned to pre-COVID levels. And that tells us that this is socially very important infrastructure, and retailers are adapting to changing consumer spending patterns.
Andrew, what is the biggest opportunity you see in global REITs?
You can't fight an ageing population. There's no getting around the fact that we're having an ageing population and also, unfortunately, increasing health issues. And so that demographic means that we think healthcare is actually particularly well placed to deliver what we'd consider to be relatively sustainable performance over a long period of time. We're not trying to necessarily tell you what the hot sector is for the next 12, 24 months. We're trying to identify real estate that will be there for our investors in 10, 15, 20 years' time. And as a consequence, healthcare is certainly benefiting from the demographic issue, combined with the fact that there's not a lot of construction, not a lot of new development taking place. So we're seeing a natural increase in demand and a limited amount of supply. And we think that's going to generate some fantastic returns. So that's certainly an area that we're very enthusiastic about. But there's lots of different areas in the real estate space that we're particularly enthused about. Residential, that's a great asset class. Anybody can tell you that obviously rents are growing. We own some fantastically well-located residential apartment buildings, particularly or REITs, I should say, that own apartment buildings in places like the US, in Canada, also in Germany, where rents are growing, certainly high single-digit figures. And again, we're not seeing a huge amount of construction activity taking place. So the REITs are actually a way to, we think, profitably invest in the residential crisis, quite frankly.
Andrew, just a follow-up question there, if I may. How do you determine the weights of the various opportunities in the portfolio?
So at the end of the day, we're looking for those that are going to generate the most amount of cash flow for the least amount of risk. And we weight it accordingly. Now, for what I mean by risk, it's the potential for supply. Yep. It's the potential risk associated with leverage, if the REITs do have leverage. And we look for the quality, again, of the tenant demand. And so in the case of healthcare, we've got quite a bit of conviction in that space, and as a consequence, the weightings reflect that.
Andrew, last question. How should investors use RCAP in a portfolio?
Well, Chris, I mean, that's hard for me to say, but look, at the end of the day, this is some of the world's best real estate. It's going to be relevant today, relevant tomorrow, relevant in 10 years' time, provided it's in the right location and they've got the right balance sheets. And we're pretty confident that the sector is actually well placed on those fronts today.
Andrew, thanks for chatting with Livewire.
Thanks, Chris.
If you enjoyed that Fund in Focus as much as I did, make sure to give it a like and don't forget to follow our YouTube channel because we're adding lots of great content every single week.